Here we go. Pump it up, boys and girls. We got ourselves some major enthusiasm for Tesla. Yes, we do. And it makes sense because this is the vote week. And boy, oh boy, are people enthusiastic about the vote week. Anyway, it is actually a really big deal. The Tesla vote is this week, and so a lot of people are very, very, very excited about the Tesla vote. High expectations that this is going to pass with flying colors, which leads a lot of trader momentum into it. We were talking about that along with many things this morning in the Alpha report, and expectations and goals and timeframes and catalysts. So a lot to cover this morning. A lot of deals going on. You got all of a sudden Google raising $15 billion in bonds. We got deals with IREN and Microsoft, Amazon, and OpenAI. This is a sweet set of deals. In addition to that, we just got the S&P Global manufacturing data, and then of course we also got the ISM. Markets don't often move on this. The bond market sometimes does. The markets don't often move heavily on this. Bonds basically flat on the 10 years, so I mean that already kind of tells you, I feel like, what you need to know there. But anyway, S&P manufacturing, we'll take a look at it. These are going to be the final October reads. So we've already had a preliminary read on this, but it'll give us a little bit of a look into the last 2 weeks, if you will, on the S&P manufacturing side. Let's take a look over here. We've got higher production underpinned by fastest demand growth in 20 months. Folks, that's bullish right there. Look at that. That's very bullish. The performance of the U.S. economy improved again in October. However, growth was domestic-led. Ooh, yeah, talk dirty to me. All America right here. Okay, so we've got challenges in predicting future trade policy, limited outlook. That's fine. This is where we're going to talk about GDP again, isn't it? GDP. No, I'm surprised they don't mention it this time. Employment growth, meanwhile, remained modest, but that's fine. At least you've got some growth. It's good, especially since we've got an ADP catalyst this week, which, we'll be paying a lot of attention to that jobs report this week. All right, tariffs continue to underpin the steep level of cost inflation. Headline index from the report, seasonally adjusted. Purchaser management index recorded 52.5 in October. Signal a third successive month that the PMI has posted above the critical 50, no change mark, fine. Supported by gains in output and new orders. That's great. Production increasing at a solid pace. Gains in new orders was the best in 20 months. Growth of new work has been recorded consistently. This is great. Consistently relying on the domestic market. That's fine. And tariffs were a dominant theme. U.S. manufacturers reported a solid start to the fourth quarter with production at an increasing rate. Let's see here. However, the hood picture is not so healthy. Worrying is the rise in unsold stock in October. Interesting. But how do you have the largest rise in orders, right? Fastest demand growth in 20 months and a rise in order, but stock rising? Widely linked to weaker than anticipated sales in export markets. Oh, okay. All right. Could trigger a downshifting in production unless demand arises from the internationals. Okay, fine. Companies have also become less optimistic about the year ahead, sentiment close to gloomy levels. All right, so not the cleanest report. It's almost sort of like, hey, we did good through October, but now we're seeing a little bit of a slowdown. I don't know what to make of that. Overall confidence remains subdued because of tariffs. There's uncertainty that restrained hiring in October. Degree of excess capacity served to limit hiring. Manufacturers tended to have sufficient stock on hand to meet current production requirements, so less potential ordering there. So to me, this feels like broadly bullish with an asterisk. Yeah. All right. Now let's see if we can get the ISM data. You've also got Goolsby talking right now. I believe the pace of rates will settle a fair bit below the current level of rates. That's good. Rates should come down with inflation, although inflation data is still worrisome and we're nervous about front loading. All right, Goolsby, what good does that do us, huh? What good is it? ISM Manufacturing. Let's go get that report. For that, so that was the October final on S&P, which is somewhat mixed, you know? I mean, it seems like it started bullish. I'd lean bullish on it. Like, bullish with the asterisk, I think is the way to put it. Okay? So, let's try to reconcile it, though, with the ISM report. All right. So, ISM report, which came out a bit later, and let's save it. So, this is the ISM Manufacturing PMI for October. And if we pop this open just to get a little bit of survey, the market usually doesn't trade off of these. Usually people just don't really care about these, but whatever. Economic activity contracted in October for the 8th month. So the ISM manufacturers, they're less happy. Okay. Following a 2-month expansion, we got a decrease compared to September. The new orders contracted for a second month following 1 month of growth. Not great. Production index was lower than September. Prices remained in expansion, though that came down. Backlog and employment were up, though, so that's good. Both of these are just mixed reports. U.S. manufacturing contracted at a faster rate with contractions in productions and inventories. Yeah, but it wasn't like a fall off the cliff. See, yeah, then you have here all 4 demand indicators improved, but are still in contraction territory. Business continues to remain difficult as customers are canceling or reducing orders due to uncertainty. Decreased domestic demand for finished products. In general, business is strained. Money is sitting tighter. That's an interesting line. That's in miscellaneous manufacturing. Sales continue to underperform. Tariffs continue to impact. Commercial vehicle business is depressed. Customers continue to delay purchases. Unpredictability of tariffs, volatility of commodities. Wonder has turned into concern. You know, I'm going to lean towards both of these are mixed reports here. So this is the ISM, this was the S&P, and they had their pros and cons, both of them. So I don't know that I could really argue that I could see something, like get a lot of color out of these. All right, so Tesla on the other hand, look at that. Tesla up 3.4, and guess what else is up 3%? Symbotic. You know, the amount of enthusiasm Symbotic has gotten, and I mean, we're really grateful. We've been excited about them since $20, but the amount of enthusiasm here is crazy. It is getting pretty wild. So let's get into just sort of this is going to be the S&P and PMI reads. I'll make the argument here that these are just broadly mixed, no cliff here. And I think that's a good way to look at it because that's somewhat the way just the economy feels right now. You know, AI is booming, and then when we look at information or data, we're just getting mixed data. We're not getting a sign of, you know, a cliff dive here. No sign of cliff dive in a final S&P October read for manufacturing. And likewise for ISMs. Although I liked seeing a little bit of a drop in prices there for still an expansion though, but the rate of that expansion slowing a bit. Okay, Qs here look like we're trying to trend almost back down towards the 630 line here though. Looks like we're finding a little bit of a floor at the moment. You've got Bitcoin. You know, Bitcoin has really just lacked enthusiasm. You know, all of October was just a what the hell month for Bitcoin. And I think some of it is just people looking and saying, hey man, like I'm just going to go make money on AI and get some like a productive asset that, you know, people can just shower money at and do fine, which so far has been the case. I mean, you know, Microsoft's up again right now. You've got Palantir earnings today. You've got Nvidia up 269, which is incredible. AMD's, I mean, even the fact that it's break even today is great. They got a rebound on Meta. I've got, all the Tesla enthusiasm you could really ask for. You've got Netflix still slipping a little bit. That's interesting. Amazon. Oh, look at the line on Amazon. It's perfectly riding this line on 254 right here. That's not a big surprise that our lines get ridden, but I always like to see these because I have not had a line on Amazon in a while, and as you can see here. This line's pretty impressive so far. So we're going to keep an eye on this to see if we can, stay above this. I will say it's surprising to me that CoreWeave is not getting love. The 137 line, just a consistent rejection line. I always get asked about CoreWeave in the course member live stream, and I'm like, guys, you really think it's going to break the 137 to 140? It hasn't managed to pull it off in a very, very long time. So we'll see. Then let's see here. We've got I wonder if we're going to be able to hold on to some of these trader gains on Tesla. I do think, and I'll be clear about that, I do think a lot of momentum on Tesla right now, unfortunately, is sort of trade momentum. Let me see if I can get an extra battery over here. I hate these things. Hey, yo, Jack. Would you mind bringing me a AA battery? Thanks. One. All right. So, anywho, all right. So, someone in the chat was like, Kevin, you need to get a wireless mouse, and I'm like, really? I always use a wired mouse. Like, I kind of just prefer the speed of the wired ones, and then sure enough, I listen and I get this wireless one. And I'm like, bro, I've had this for a week and a half, and it runs on a AA battery, and you're telling me already I have to replace it? This is a scam, bro. This one's got a rechargeable battery, one's got just the AA battery. It's just crazy. Yes, sir. Thank you very much. You want to come say hi? Yeah. Thank you. I like how your watch band matches your shirt somewhat, the little speckles. Yeah. You planned that, didn't you?
No.
Yeah, you did. Have fun at school.
I can't wear it to school.
Oh, that sucks. You just wear the band. See you, dude. All right. Anyway, oh, look at that dump on Meta there. Look at that, just coming. I wonder, did we get any news here? No, I didn't see any news. It looks like somebody just hit the sell button, huh? So somebody hit the sell button. Is that taking the Qs with it? Let's see here. AMD just went neg. The Qs. Interesting. It's like we're going to 630 right here on the Qs, but I don't see anything on the headlines. We know we've got OpenAI and their $38 billion deal. No, I just refreshed too to make sure I'm not missing anything. Yeah, that's very interesting. Okay, so we'll keep an eye on that. To see if that was just sort of sudden little panic selling or whatever, could very well be. All right, so let's now jump into some newsiness. Let's see what we got out on the front. Headlines. Everybody wants to see the headlines today. Google, Microsoft face less AI spending risk than Meta and Amazon. Ooh. And that's, Meta's valuation relative to the, we talked about it in the Alpha report this morning, or in the stream. Anthropic, AWS give customers of AI agents a helping hand. What? Over the past year, companies have been trying to hand over job duties to agents, but these agents aren't often good at their jobs. I mean, yeah. Let's see here. Yeah, Scott, Robinhood does referrals for home loans, because they're not a lender. So they're just they entered into it's almost like a SoFi style partnership where, they just want to make money off the referrals. I mean, you can't really blame them. They've got this captive audience in the app, so why not? But, good for them. For the past year, companies have been trying to hand over job duties to AI agents, but these agents aren't often good at their jobs. Yeah, I mean, they're okay. So AI providers are working hands-on with customers to stop them from screwing up. Mind you, this is exactly why Palantir exists, in my opinion. IMO, this is why Palantir exists. To help dumb, not to call them stupid, AI dumb companies actually win with AI, right? Like, it's a big data play that can really help a business implement this. Frank, European retailer, somebody says the Logi MX mouse. Logi MX mouse. Oh, what is that? Let me see here. What the hell is that? Oh, that's kind of like a giant fancy mouse with wheels on the side. You know, I'm a big fan of buttons. I mean, that's cute and all, but I'm a big fan of buttons. So, you know, like, here. I like these sort of mice, because I got all these extra buttons on the side, which I use about half of them, which is really funny because they have these other attachments where you could get about 6, but I'm so used to using the placement with that like 12 button arrangement that I don't end up using the 6 button arrangement. But if I was new to using them, I would probably get into using the 6 button arrangement. The 12 is a little much, but I do use about 6 of them. So I'm a big fan of those. I like the buttons. Anywho, okay, so where were we? Let's go back to the information here. Yeah, so I think this is valid. European retailer similar to Best Buy struggled with AI from a customer support agent after testing models from OpenAI, Google, and others. Reliability was an issue. The agent would ask customers to provide serial numbers when they reported defects, but conflated them with serial numbers for other products that were identical except for one digit. Oh, wow. Okay. Well, I mean, those little things should be fixable over time. The challenge is that models out of the box are great at benchmarks, but are not great at enterprise environments. Oh, interesting. A little negative right there. Okay. So, AI undeniably transforms people's work lives through general purpose chatbots and AI coding tools, boosting revenue at companies like OpenAI and Microsoft, but many businesses have struggled with more sophisticated AI agents. Totally agree with that. And that those firms have pitched as capable of automating entire job functions. Yeah, no. That's the pitch, but it seems unrealistic. Customers say they get value from agents only after their software engineers put months of labor in to set up the agents. Again, what Palantir does. And after they get direct help from companies that sell AI. And tech leaders now say companies can't expect complex AI agent or projects to work without such hand-holding. Yeah, makes sense to me. Yeah. Hold on a sec. I gotta say goodbye to the little girls. Bye, Ella. Bye, Claire. Bye, Claire. Hey, sorry about that. It's Ella and Claire's first day at school. So I kind of want to be there when it's time to pick them up from school, but I wanted to at least say goodbye to them. So let's see here. Blah blah blah. Okay, whatever. What automation station? Here's Cox Automotive, which sells $9 billion a year in software to dealerships. Well, I remember when that went down. They had that big like Cox hack or whatever. Automation station. Recent advancements in AI have promoted businesses to automate a variety of roles and tasks. Financial modeling, interpreting x-rays. Oh, this is just sort of like broader. Goodbye. Take care of those girls. This is what you would expect. Routing customer support inquiries, marketing copy, meeting summaries. I mean, this is all boring. Sales voice calls. Come on, none of these are that big of a deal. User manual chatbots, big deal. Financial modeling, I'd still be sus about this. I think in medicine, you've got some really cool opportunities. All right, whatever. So, Maybe we'll come back to that. It's a little boring, though. OpenAI, we saw the $39 billion deal with Amazon. Let's just see if there's any other detail here. Oh, it's a 7-year deal for this compute, and it's for Nvidia chips. So, big win there, because now Amazon has basically a contract to sell those Nvidia chips, and it's like, oh, all right, perfect. Great. So let's see here. Amazon share price rose more than 5% to a record high in early trading. Yes, we saw that. Deals have been put together by a small team within OpenAI. The company is planning ambitious build out. Well, we saw the Sam Altman interview with Satya Nadella this weekend. That was a great video. I think if you haven't watched that yet, it's worth watching. Elections, the earthquake. Let's see. Why Wall Street won't see the next crash coming. Man, that's a provocative title. Has Airbnb reached its peak? Do y'all still use Airbnb as much as you used to? And you can't vote if you're an Airbnber. Like, in other words, like you provide Airbnbs. Like, just from a consumer question there. Free exchange, new globalization paradox, Schumpeter, Batterer. Okay, that's fine. So let's see here. Yeah, because, the hotels have just gotten so good at providing, competition broadly to Airbnb. I personally almost never choose an Airbnb anymore. Mostly because I just figure, hey, like if I want like a resort style experience or whatever, I'll just go to a hotel that offers, a townhouse that I could rent, because I'm going to get the brand. So, hotels have gotten really, really good at competing. And I think it's just because maybe I've just had a bad experience. Maybe I've just had one too many cases of just like trash experiences where, you go to an Airbnb. See, like when Airbnbs first started, everybody freaking loved them. But now you've hit this wall because they kind of gotten to that point where you kind of have to renovate them again, right? So people go crazy for an Airbnb boom in 2020, 2021. People renovate them. But now those renovations are all, 3, 4, 5 years old. So you go in there and like, I've been in Airbnbs before where like the pictures are beautiful. They're obviously like 3 years old, because then you go in there and the furniture's crusty or broken. The games that they provide are nasty. There are cockroaches out. It's like disgusting. And so the lack of sort of quality follow-up from individual owners has been very frustrating for me. So this Economist article that says, hey, has Airbnb reached its peak? It does not surprise me at all that it's possible that they've reached their peak here. But let's take a look at this. Deflating. Airbnb's gross bookings. So you can kind of, it still looks to be like a move up in gross bookings, so good for them. Airbnb's gross margin in second quarter was 21%. They said they'd repurchase $6 billion worth of shares, and their market value exceeds that of Marriott. In fairness, Marriott is like the brand, but they don't actually, I suppose much like Airbnb, they don't actually own the underlying properties. I think 98% of Marriott properties are just licensing the Marriott brand. But again, in order to maintain that brand, you have to follow certain cleanliness standards or renovation standards and investment standards or what. So very interesting. Although $86 billion worth of bookings made it through the platform in the 12 months to June, it represented a 10% increase with a falling growth rate. So basically making the argument that it's just not growing like it used to. I wonder what their valuation looks like now, because sometimes you get these plays, especially consumer plays, they just get beat up and beat up and beat up. And then you start wondering, like, when's it going to become an opportunity to buy? Like, I've been looking at Dave & Buster's, and I don't own any of it, but it's almost back at COVID levels, $500 million company. Like, it's getting, some of these numbers are starting to get cheap. So, but anyway, if we go look at a valuation on Airbnb, let's go pull up Airbnb stock. Let's go out on the weekly. You can kind of see on the weekly chart, this thing's been converging to the downside. If I go to a financial analysis for this $125 stock, I can see that their earnings per share are expected to be $4.29. That puts me at a 29 times PE ratio. I've got a top-line growth expected by Wall Street to be about 9.5% over the next 4 years. And then bottom-line expectations, I'm looking at 13, 16, 17, 20. I'll probably put them at about 16, divided by 16. They're trading for about a 1.8 peg, so they're not overvalued. They just don't have enthusiasm right now. Seems to be potentially the issue for Airbnb. Let's go see what else The Economist has for them. So amid a pre-pandemic expansionary frenzy, the company ventured well beyond accommodation. They got into experiences. Then came the pandemic. Obviously, they surged. The company's looking for new growth opportunities beyond its core market, so looking for new locations. Companies expanding into hotel bookings. That's interesting because hotels can theoretically list available space on Airbnb, just to have another place to essentially compete for customers, which makes sense. Hotels appreciate Airbnb because unlike other booking sites, it does not spend lavishly on Google Ads, which push their own websites down the list of search results. Fair. AirDNA reckons that Airbnb has 4.5 million private hosts and some 95,000 hotels. That makes sense. List your open space there. Then there's AI, which could upend travel planning. You know what was wild this weekend? I don't know that there's really anything really exciting about this article, but what was wild, I saw this, and apparently this is older, but this was quite interesting. People were kind of lashing out over this, and there were opinions all over the place for this. But it had to do with this hotel check-in that was basically, an Indian help desk through this virtual terminal. And people were losing it over this. It was really interesting. I guess I got to get through. Oh, a Hims ad for 30. So look at them. They're advertising hair loss, grow thicker and fuller hair to me here on this USA Today ad. Yeah. Okay, that's some interesting ad targeting there, I guess. All right, let's listen in. Look at this. Oh, it would help if I unmute it. Okay. Come on, homie. Here we go.
Were you back here behind the desk, back there, or are you somewhere else?
No. We are working remotely, sir.
Okay.
So, basically, you have a kiosk.
I walked into the hotel, and some people were being a little bit loud and yelling at a screen. It is strange. It's definitely not like a face-to-face interaction, because I'm not saying it glitches, but there is kind of a slight delay between the conversation.
Anyway, so basically outsourcing this like hotel check-in process to India through like a giant screen. And there was some more footage on it as well. And it was really interesting because people were not very happy about it. Yeah, here it is. Here's the actual full video. And apparently this is older, and that this was a La Quinta that wasn't supposed to do this, that they sort of took this upon themselves. Well, listen to this.
Okay.
We need 1 room key or 2 room key?
2, just in case I lose one.
Yes, I'll just make this for you. Just help me with your signature, where it says guest signature. Let me just process your room registration form.
Please wait while we process your registration form. Please note that we have a strict policy of no smoking, no pets, and no visitors allowed in any of
Kind of
the
crazy, huh? Anyway, it was kind of interesting. So, I mean, it wouldn't surprise me, honestly, to see more of that kind of stuff. So if you think about it, you could get labor just for so much cheaper, right? Dude, look at, holy smokes, Bitcoin just tanked, man. And so the Qs are right at 630 now. The hell's going on, man? What the hell is on my line, dog? This is some crazy stuff, dog. Bro, this is ridiculous. Somebody says, I'd walk out, huh? Yeah, actually, that was a pretty common sentiment. You know, a lot of people were very pissed. They're like, this is anti-American. Like, how could you do this? I thought that was very interesting. There was a lot of that sort of sentiment. So, okay, let's see what else here. Okay, so I don't actually particularly see any news. I know we have ADP data coming up. So, let's see, Johnson, here, stock gap talk says praying elections change stock gap talk, mindful that time is running out. House Speaker Johnson, there are legal impediments to SNAP funding, must recalculate partial payments to SNAP recipients, talk to Trump over the weekend about SNAP. Fed Goolsby, consumer spending is a key driver of economic momentum. Economy has been pretty strong with weakness in certain sectors, and then immediately start talking about the consumer. Yeah, well, the consumer itself, outside of AI, has definitely been, smacked upside the head. It's been a rough one for consumers. Okay, so let's see if we bounce perfectly on this line. Wouldn't that be something? Nice little delicious bounce right here. Let's see what we get. Okay, cool. So what else? Okay, so then what was the Economist piece? The Airbnb piece was a little boring. They really just talked about the growth rate there. Let's see what this is. This is why Wall Street won't see the next crash coming. Jamie Dimon warned we're entering bubble territory. This scumbag always warns that we're in bubble. There's always a hurricane on the horizon. And honestly, I'm of the mindset that Jamie Dimon will always tell you that you need to shit the bed. I shouldn't say that. You need to poop the bed because you need to be at the world's largest bank. Like, I honestly think he is incentivized to be a doomer about markets to get you to be afraid for your money so that you bank with JP Morgan. And I mean, look, there's some great people who work at JP Morgan, but I think the bank overall, I just think there are way better options. Whether you use Intuit, which you can't really use solely, or SoFi as a personal bank, or Mercury as a business bank. Holy smokes, fantastic product. I hate to say it because I'm not the biggest fan of Bank of America, but even Bank of America I like better than JPM. But anyway, David Solomon at Goldman Sachs talks of investor exuberance, valuation frothiness, fine. IMF worries about a disorderly, market correction. The Bank of England has recently warned about the risk of a sharp market correction. This is true. They did. The IMF also warned about private credit, right? Let's see here. Also warned about private credit, given that 90% of the funding comes from big banks, which creates a systemic risk, right? Then it's no longer the cockroaches or idiosyncratic. It's actually people like, Jamie Dimon that are lending directly to the very cockroaches, right? So he's like, why is crypto dumping? Well, because somebody hit the sell button, bro. You always have to remember, like, why does something suddenly dump? It's because somebody sold, like there's no news right now. Somebody hit sell. That's why it's dumping. So that's the way it works. Okay, so somewhat of a canary in the coal mine too, by the way. Look, it's already rebounding. Is Carvana. And they're actually up just fine here. Okay, so let's see here. They're all right about one thing. Valuations are dizzying. To buy a basket of stocks in the S&P 500, investors are paying 41 times. Wow. That's quite expensive. I think we're pretty close to peak there. I think we got to 50 in .com. Yeah, a multiple exceeded only during the .com bubble. Yeah, there it is. But not by much. Well, 9 points. Investment grade yield a small premium. Credit spreads are so slow. They were last this low in the .com bubble. Somebody says, have the Qs bottomed out? So from a trader perspective, I'd watch the 630 line. But be careful. We don't have 5 minutes here. My rule of thumb, especially when I'm doing this with course members, and we're kind of like live watching the sticks, my rule of thumb is you need 5 green candles on the minute. Because I don't think trading the minute candlesticks is great. I don't mind seeing, what's within the 5 minutes. That's why I like looking at the 1 minute candlesticks. But I like waiting usually for 5. So if I could get 4 more minutes of green here and actually get some volume, then that gets exciting to me. But I'm not really seeing a volume spike yet, which could be conducive towards some more bleeding here, but we'll see. Anyway, even gold, normally a haven, seems unusually vulnerable to traders' whims. Yeah, that's actually a really good point. The fact that gold has had these insane moves shows just how much momentum there is. It's like, I hate to say it, but it sort of feels like there's like this army of sheep, and they're just going, now we're at CoreWeave, now we're at Beyond Meat, now we're at gold, now we're here, and now and it's just like there's so much moving. I'm bleeding a little bit. This is annoying. You get like some form of, I don't know. Yeah, like some packaging tape here. I guess or material. This will have to work. Whatever. All right. Perhaps one correction has already begun. Might others follow? For anyone hoping to beat the market, including quants. Blah blah blah. Nirvana. Blah. Okay. Forecasting a correction comes down to forecasting vol. Yeah. Yes. Sure. If volatility is decently low, let's go look at the VIX. Let's see here. VIX. See, look. That's a nice bounce right here. Literally on my line, boys and girls. It could not be more perfect. These are the kind of lines, by the way, you get in the Alpha Report when you're in the membership. Literally perfect. So, volume's still stable. Obviously, price action strong. Volume candles rising a little bit, which is good. Yeah, now getting a little bit of a rise as that minute comes to a close. There, the minute candle's closed now. That is a bit of higher volume than we've had. That's the highest volume that we've had in about the last 9 minutes, which is good. So highest volume that we've had in the last 9 minutes. Now you're in the third bullish candle. If I average this out, it might actually, or unaverage it, we're actually at the fourth candle, right? So you get an unaveraged. I've got 3. I'm on the fourth candle now of green. One more candle of green here, and the bounce could be in. So that's kind of optimistic. How are some of these others doing? So Meta's up 18 bips. Meta's bouncing. Just looking at some of the components here. Meta bouncing a little bit. How about Apple? I've got Apple's already been trending up for a little bit. Bitcoin's bouncing back up a little bit. Microsoft and Tesla. Tesla's bouncing a bit. That's good. All supportive of a really nice bounce at this line. And you've seen this line here since before we went to it. So it's not like, sometimes people, I watch my videos and they're like, oh, you just drew the line there after the fact. I'm like, bro, you obviously don't watch the live streams. Yeah, there we go. That's our 5th candle right here. That's pretty bullish in my opinion. And volume's rising. The last two candles over here are the strongest volume candles we've had for the last 10 minutes. Suggestive of some nice buy the dipping right there. See if it holds. Anyway, forecasting a correction comes down to volatility. Oh yeah, we're gonna look at vol. Whatever, we'll do that in a moment. One, volatility by mobile model means prices spend long periods moving only by relatively small amounts. Blah blah blah. Most of the time, this is all just vol trading. As a result, many traders build models that complement their autoregressive ones. That's fine. Corporate earnings might all contribute to a sudden dip in sentiment. Machine learning tries to get the combinations. Unfortunately, few of the strategies seem to work. Yeah, these ML strategies. I've seen so many of these AI funds actually underperform because they're just trying to rely on AI. It's kind of funny. Traders do have other tools for spotting reversals. Blah blah blah. All right. That was honestly a pretty boring Economist article. Like I feel like they're like reaching now for news. RIP. That's okay. That's what you have me for. I'll filter it for you. You don't need an AI summary. You need the Meet Kevin summary. Somebody wrote that comment yesterday. I thought it was really nice. All right. So what Ilya saw. Ooh, screenshots about Sam Altman. I want to see it. All right, let's see here. OpenAI is continuing its trend of diversifying on today's column. Okay, what do we have here? But all of the main characters in firing and hiring of OpenAI Sam Altman are still very much around in positions of power. They're also providing new information about what exactly happened in the phonetic days. For instance, let's see here. Deposition of Ilya, who is in the OpenAI board. Phrase, what Ilya saw has been a running meme on X. Okay, so... Clear lawyers representing... If there's one thing he made clear to lawyers representing Elon Musk in the deposition, it's that much of the evidence he presented to the board to push Altman out, came from the lady, Marathi. Specifically, he said he used a number of screenshots from Marathi to produce a memo to the OpenAI independent directors to convince them to fire Altman. Well, I'd love to see the screenshots and other information include allegations that Altman consistently lied to colleagues, undermined executives, and pitted them against another. There's also a reference to Marathi's allegation that Altman retaliated against her in subtle ways for giving him critical feedback. Okay. Upon Altman's firing, Marathi took the interim CEO role only to backtrack. I don't know how much color there is in this. Since the firing, Altman, blah, 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 blah. Yeah, alright. Whatever. This is just sounds a lot like drama, honestly. Drama. Electric. China's next target for domination. Robots, rockets, and low Earth sats. Dude, they're good, man. Like, China is, preparing for the $1 trillion vote. That's actually a great title. That's so much trader momentum is going to go into this because I think people think this is just going to moon to 490 490 is my target if it passes. That's my target. White House says China will drop antitrust. Netflix reportedly explores bid. Okay, who cares? This is the big deal this week. Everybody's going to be watching this. Oh, is the deposition transcript any good, Alex? Thanks for saying that there in the chat. I wonder how... Hey, look at that! Q's still moving. Really nice. 490 is my target here. So we still got some room to go on Tesla. Okay. Let's see here. All right. Tesla shareholders have until Wednesday night, unless they're going to Texas to attend the annual meeting on Thursday. The package would award Musk up to $1 trillion over the next decade. Robin has been on a media blitz, dangling a bigger Tesla stake is the only way to get him focused on the automaker over other ventures. Yeah, I think this is bullcrap. Some big shareholders are unconvinced. Yeah, this is what they were last time as well. I mean, the same thing happened last time. Some of the big funds come out, they're like, oh, we're going to vote no. You know, while the vote might end up too close for comfort, it's hard to believe the majority of Tesla shareholders will reject the proposal, given the company's army of individual shareholders. I agree with that. Plus, many shareholders like the fact that Musk stands to gain nothing from the proposed package unless Tesla shares rise significantly. That's far from a sure bet, given regulatory hurdles and otherwise. Elon's now teasing flying cars, blah, blah, blah. Yeah. You know, there was somebody who was on X putting together, let me see if I can find it. Do you have a price target if it doesn't pass? I do, actually. And we talked about that in the Alpha report this morning. But most importantly, right now I want to see the, let me see. I want to pull up the Tesla. Where was it? There was somebody who had the Tesla vote, and I'm pretty sure I bookmarked it. They had a breakdown of their estimate of the votes. People didn't seem very happy about it because they didn't seem bullish on it. Maybe I can't even find it. Maybe it's been deleted. Yeah, who knows? Or maybe I didn't bookmark it. Tesla vote. Polymarket is betting a 96% chance that the vote goes through. That's probably then why you're seeing such enthusiasm. What is this? Here you can see the result. That's fine. Okay, got it. All right. Whatever. We'll keep an eye on it. But either way, it seems like there's a lot of... I mean, I remember this the last time they had a vote. There was so much drama around is it going to pass? Is it going to pass? And clearing the shareholder vote last time was such a good catalyst for the stock. In fact, the last time we had that shareholder vote, we talked about how this was likely to go on a big run. And I think I made like 3 or 4 videos before the shareholder vote. I'm like, this is really bullish, once it clears. And it did end up clearing, and it passed, and it was very, very bullish for the stock. It never hit those levels again. So, I would anticipate the same will be true this time. So we'll see. Okay, so Tesla, 3.4%. We've got, what else do we have here? Palantir earnings today. Those will be really fun to watch. We've got Meta, IREN. That's interesting, actually. Look at IREN. IREN's really given up since the beginning of the day. Very interesting. Nice little bleed there. Somebody says, I hate this market. Huge risk, minimal upside. It does feel that way, but you even look at a company like Nvidia and just look at the movement that it's had in, the last few months here. Yeah, so from 170 to 210 or whatever, right? Was it 207? 207 divided by 170. That's 21% in just a few months. Dude, that's a great year. And that's happened in, 3 or 4 months here? It is a little wild. I can understand why people are frustrated. Okay. Let's see. Let's try the journal over here. AI revolution will bring prosperity. Yeah, it will eventually. Don't worry, be happy. Lessons from Trump's China trade war. Taco. Microsoft's AI efforts in the UAE get a big boost. Cool. Let's see here. Election wins Tuesday won't ease divided democratic problems. Nope. Uh-oh. Risky loan from the housing bust era is making a comeback. Oh, no. Oh, no. Adjustable rate mortgages. Unaffordable housing market is causing a growing number of buyers to take on a riskier type of loan, ARMs. These loans initially offer a cheaper borrowing rate compared with a fixed rate mortgage, but ARMs reset usually after 3 to 10 years, which can saddle you with higher payments if mortgage rates have risen. Yeah, but honestly, I actually don't blame people for getting ARMs right now. Like an ARM right now seems like a good deal because, we anticipate that rates will just slowly trend down. They may not move rapidly down, but the slow trend down, I think, is an easy bet to make right now. So I don't disagree with that bet at all. Borrowers who want to refinance when rates drop might qualify if they had a job loss or another change in financial condition. Right. That's always the risk factor. Always the risk is people bet on being able to refinance, and it is dangerous. Wow. That's cool. All right. Okay, but buyers are betting that mortgage rates will fall in the coming years, enabling them to refinance. Yeah, this betting on a refinance, that's always a red flag sign to me. About 10% of purchase mortgage applications for ARMs in the week ended October 3. In early 21, when mortgage rates were near historical lows, 3%. Okay, so we're more than 3x the level of people using ARMs. Again, I don't actually see that as that bad. The issue that was bad in the bubble was, dead people were getting loans. Like, just people choosing to take an ARM right now, that actually seems like a prudent financial decision. So, Washington, D.C. bought a 5.25 7-year ARM. They chose it over the fixed rate at 5.875. I mean, but that's great, because actually, for some reason, you can't refinance in the future. You actually also get the lower rate automatically, right? I don't disagree with this. Of course, there's always the risk that we have some inflation surge again, but with the slowdown in the broader economy, I don't see that as an issue. A third would consider an ARM. I think it's misleading to say that this is like the housing bubble loans. You know, the housing bubble loans were unqualified loans to people who got teaser rates that then reset higher within 6 to 12 months. So this is misleading. I wonder if they're gonna hose them over here. This is a pretty bad article. 5 or 7 year ARMs aren't a big risk. Let's go, dude. That you saw it live. The same freaking reaction, man. The same reaction. Because I'm like, what are you talking about? This is like a housing bubble loan. It's smoking crack. See, if you want anybody who knows a thing or two about real estate, make sure you to consider investing in House Hack, now doing business as Reinvest. Check us out, reinvest.co. Read the offering disclosures and solicitation, because this video can't be one. Actually, we just got our... So actually, like, the level of fundraising that we have done in just the last 3 days of November, which is a weekend, is insane. Like, I think we're almost at 500,000 in fundraising in just 3 days. And that includes weekend days, which is crazy. So, you know, shout out to all of y'all supporting what we're doing over at House High. There's a lot of time to refinance. Let's see. Yeah, I mean, I'm a big fan of disagreeing there. The headline was full on clickbait. Totally agree. But the whole, like, I don't really care about the headline. I care more about the content, but I think the content's bad. Educate instead of scaring people. I've saved so much money with ARMs over 30 years. Yeah, I mean, but if you could have locked in, you know, a 30-year like a lot of people did, myself included, back in 2021, that would have been great. I advise young people to buy a home with a 15-year mortgage if they can't afford the payment. They're buying too much house. I disagree with the 15. You can always make an extra payment, but I don't think you want to get saddled into making the extra payment. Not a big fan of that. Okay, so let's go to... Let's see if there's anything on the crypto news side, because obviously we know there's some selling pressure going on right now. We've got Ethereum's also down back to 35. Wait, I feel like that's one of my lines. I feel like just last week we're like, uh-oh, Ethereum's going back to 35. No, don't have a line there. It was 37.64. Interesting. This is on the 1 minute. Let me go out a little bit. I don't look at these lines enough, apparently. Yeah, no, look at that. Wow, we just cratered through. This isn't even that good. I'm going to downgrade this line. Oh, is that a fib? No, it's not. It's just its own line. Okay, good. I'm going to downgrade this one because it didn't do that well. So there we go. Make that one a little smaller. I could see a little bit of an attempt here, but that's kind of a lame line. That's not that useful. I'll have to do some updatings on technicals here for Ethereum. But anyway, we saw Bitcoin. Yeah, still dumping, still getting some selling pressure over here. And the chip plays are still holding up. I'm still of the mindset that people are like, man, why am I going to own crypto right now? All the bullish catalysts are gone. Let me go buy tech stocks, you know. Jim, yeah, always. Just email us at staff@meetkevin.com. Make sure, I see you just joined over the weekend. Thanks for joining. Make sure you watch the first lecture. There's like a 10-minute walkthrough video. So if you log in through Teachable, you log into your account, watch the very first video that comes up. And it's like a 10-minute walkthrough of how to get set up, how to use the product, how to use the app. I recommend you start there because it'll probably answer 99% of the questions. And if you need help beyond that, you'll be able to specify any issue in email, staff@meetkevin.com. So somebody writes, just realized why the AI bubble is going to burst. All the AI chips in the world aren't going to improve the AI software. Thoughts on loading up a SOX? Isn't that the short semiconductor ETF? Yeah, it is. Man. The thing is, dude, you get it like, yeah. Are all the semis going to fall at some point? Is there going to be another down cycle? Of course. But if you try to time that on a triple leverage short ETF, you could get hosed before you even have a chance to be right. So, you know, you really have to, I feel like you need some kind of catalyst that's negative to push you over the edge. Like the start of the unemployment recession, or something's got to actually start that catalyst. But to blindly make that bet right now, I mean, who knows? Maybe, but I feel like it's like throwing it on the roulette wheel, or worse, like, I don't know, craps table or something. 210 spread right now is at 51. A little bit of a push up back into shock territory. What else we got here? This is the BBC. Wow. I'm the luckiest man alive, but also suffering. This is Air India's sole survivor. Says it was a miracle, but he has lost everything. His brother was a few seats away. It's so sad. There's got to be some major, like, survivor's guilt here, you know? I'm the only survivor. I lost my brother. My brother is my backbone. He was always supporting me. Now I'm alone. I just sit in my room alone, not talking with my wife, my son. I'm just alone. That's so sad. Yeah, that's just freaking crazy. All right. What else do we have? Politico, utterly shameful. Congress to crush U.S. record for longest shutdown. Oh, yeah, there's no doubt about that. What is this? Newsom's apex moment? He's rocketing towards the 2028 primary with wind at his back. Polling suggestions suggest Prop 50 will pass comfortably on Tuesday, giving the governor a victory on the national stage and saving him from an agonizing loss. And Schwarzenegger has been campaigning against him on this, but whatever, it's more California politics. All right. So, what else? Come on, baby. Let's try the Bloombergs. Quantum Firm to go public in SPAC deal. Oh, here we go. Another one of these. Let's see here. Quantum tech company says it will go public through a merger with Crane Harbor, a SPAC, in a deal that values the combined business at $3.6 billion. This is the transaction includes $500 million gross proceeds, assuming no redemptions. More than 90% of the pipe comes from institutional investors, including AMD and others. Wow. Develops quantum computers powered by light particles, photons, rather than superconducting circuits or trapped ions, like semiconductors. Its systems run at room temperature, removing the cooling issues. Huh. Will be listed in NASDAQ and Toronto. I wonder if this is already moving up past $10 on that news. Probably. Yep. $14. It was $10. This is all the day chart. Even though I'm on 1 minute, this is the day chart. It seems like it hasn't been trading for like the last 3 weeks. There's just a big missing gap for two. Giant hole here. What's going on? Yeah, that's so weird. The Weeble chart must be glitched. Bitcoin keeps going down. Who's hitting the sale button, man? What's going on, brother? Even the Qs are struggling. Is volume going down? Yeah, volume's slipping. You had a nice push here, But look at that volume decline. All right. What else? Pfizer, Kimberly-Clark, a wave of U.S. layoffs, and then Goolsby we saw. Let's go look at Goolsby 2 this morning. Goolsby. Goolsby, also known as Foolsby. All right. Wave of layoffs. Starbucks firing 900. We had Target firing 1,800. Amazon doing 14,000. But I think that's going to be 14,000 to 30,000. Like, I'm pretty sure it's at least 14,000. But let's look at this. Reuters reported that as many as 30 would lose their job. Right, there it is. That's what I thought. Yeah, that's wild. Paramount 1,000 workers. Molson Coors 400. Can't get carb-conscious customers to drink enough beer. Separately, each announcement can be read of one-off. Economists to worry. This is a warning sign. Interesting. Look at this. Layoffs are already higher than for any year since 2020. Here's 2008. And the colors are different quarters. Wow. We might actually pass 2008 levels of layoffs. Look at this. Because we only have 3 quarters so far. We're at an average of, what is that, 310 per? So that'll put us at 12.6. Yeah, dude. We are on track to pass 2008 in layoffs. And 2009 was another big layoff year. Wow. Look at that. It's really trended up here, huh? Fears of a $1 trillion AI bubble. We'll take a peek at that. It's harder than normal to get a grasp on the labor market, especially with the BLS going dark. That's Trump's plan. It's part of the, that's a feature, not a bug. Highest year-to-date total of challenger job cuts since 2020. U.S. job cuts for the first 9 months already passed the worst full-year layoffs since 2009. Those in government have been affected the most. Right. So that makes up a whole chunk of it. Until recently, the U.S. has been in a low-hire, low-fire economy. Government cuts the biggest. Yeah, that's for the challenger. Plenty of available workers. What is this? Veronica Clark of Citigroup. Now, who's North? North puts it more bluntly. Who's North? North. Dan North. Senior economist at Alliance Trade Americas. And what does he say? He says, we're not in a low-hire, low-fire environment anymore. We're firing. Wow, so Dan North's going bearish. I wonder if he's got other stuff that he says on like X or something. Dan North firing. News. No. It's the only thing he's recently been interviewed in. Size and pace of layoffs suggest managers are more broadly losing their fear of firing. Right. Well, that's the biggest risk, is that, you know, some of these firings just sort of like start a cycle. But that's been the risk for about a year now. Okay. The Fed sees just a gradual cooling, but nothing more. But again, like, the problem with the Fed is they're going to be biased, you know? They can't tell you that the economy is crashing because they will self-fulfill a crash. So they're incentivized to say everything's fine. Companies are turning to temps. I don't know if that's true. Let me see here. Temporary hiring. Temp hiring, St. Louis, Fred. And who reports this anyway? See, this was last updated in September. So we're missing data on so this is a BLS probably issue. 4, 5, 6, 7. Yeah. The BLS must report this because that's when the next tentative date would be. But temp hiring is down, which is actually generally an early warning sign of, negative news. So a pickup in temp work, that's actually very interesting. Manager laid him off in October, right after he finished a 10-hour shift. We have no work. 65, who's planning to retire soon anyway. Dude, I'm never gonna retire. I can't do it. Like, I admire the people who can do it. I'm just gonna make house hack my little Berkshire Hathaway. Somebody's got to pick up the torch from Buffett. I'm gonna do it. Hashtag no guarantees. Hashtag read the solicitation. This video is not one. Okay, Amazon to get for. Okay, so we saw that. That was old news. Okay, and then here's the bubble talk, which we always. I mean, this is probably kind of old news too. Yeah, this is from October 4th. That's boring. That's old. So, all right. I mean, we'll see. We have ADP data coming this week, so we shall see. What did Goolsby have to say? Goolsby said he wants more data. Well, you're about to get more data from ADP this week. Warned that he's more concerned about inflation in the labor market right now. Right. Well, if you get bad jobs data, that'll flip that on its head. Dude, Bitcoin's about to lose 105. Just so you know how I'm seeing that is, you see this little thingy right here? I actually love this desktop widget. Webull gives it to you. Remember, use my link. Where is it? There, I need the banner. Oh, crap, I screwed it up. Oh, crap. Anyway, it's meetkevin.com/Webull. Oh, there it comes. Wait, why is it coming so slowly? It usually comes a lot faster than that. Oh, yeah, that's right, because they updated the balance transfers, too. I think the offer is even better right now. meetkevin.com/Webull.
No. Because that's why.
Oh, man, I really screwed this up. Wow, look at that slow, awkward transition. Well, I'll have to figure that out. I did add those in.
No. It's because that's why.
I love that. Love those. Anyway, so, where were we? Here we go. I'm not decided going into the December meeting, saying to Yahoo Finance. Well, let's just watch the guy then on Yahoo Finance. Let's go to Goolsby. Yahoo Finance. Man, come on, ghouls. Where are you? Goolsby. Alright. Well, Yahoo, I just want to say Goolsby. Found it. That's my job. My job is to flip the channel for everyone. That's my job. I'm a channel flipper, okay? I'm not a real estate flipper, I'm a channel flipper. Don't ever call me a real estate flipper. That's disgusting. Oh, there he is! 69% chance of a cut. Oh, well, it's basically guaranteed at that point. Oh, damn. All right, I guess we should go into this. So we can do a quick little summary. Oh gosh. Okay, what is going on? Bloomberg. No, don't kill those pages. I want those pages. Here, let's consolidate. Before we watch this video, let's consolidate a little bit of our stuff here so we can clean this up a little bit. All right. Too many tabs. It's like I'm getting anxiety, so I'm gonna have to consolidate some of these. So we'll do that really quick, and then that way we can do a quick little catch up of what all's going on. So we looked at the ISM, we looked at the PMIs, closed that. We got 10-year Treasury going up again, not a surprise. Then, especially with some of that boom reporting, you've got, we saw this, we saw the worries about the labor market. That news is as old as it's been for the last, what's it called? Year. That's old. We saw the AI news, the AI deal news, which is bullish. We saw Tesla news. Agents aren't good at their jobs. That's boring. Venezuela. 10-2 spreads back into shock category. We'll throw that over there. Gavin Newsom, Air India guy. We have 10-2 spread we've got. And then we know crypto's falling. But we don't actually see a particular reason or rationale for that. If we go to, I want to see liquidations, honestly. That could be interesting to see. Let's look at liquidations. Crypto liquidations. Oh yeah, and then the SOFR spike was interesting. Yeah, we got $648 million worth of longs have just been liquidated in the last hour. Holy crap. Let me see here. SOFR spike. You're right. That was news just over the last 24 hours. Oh, I saved that here. Where was it? That's a good call. We could look at that too really quick. And then we'll look at this Goolsby interview. So, there it is. SOFR rate. Key short-term interest rate spiked. Oh, that was Friday. Okay, spiked Friday as the month-end demand for funding overwhelmed supply. Well, I want to see it. SOFR Federal Reserve. Well, I mean, is that big of a deal? Here's the Halloween SOFR rate, 422. We've been there before, so I don't see how this is necessarily... Where's the spike? 18 basis point increase was the largest increase. Oh, okay, it was just because of the increase. Biggest one-day move since March of 2020. Oh, so they're pissed about the one-day move. Because we've definitely been there before. You know, we've been at these levels here. See on the, but this was all before the Fed meeting. See, you got as high as 4.31, and then after the Fed meeting, you tanked. I guess the concern is that you U-turned up so rapidly. That's probably the concern. That's got to be what it is. It's the pace of that jump. Now we could also see how much was used. You know, that's a different chart. So that would be SOFR demand, St. Louis Fed. Actually, I don't even think I have to do St. Louis on that. I just go Fed. Let me get the actual SOFR chart. SOFR. Dang it! I mean, it's so freaking hard to get the chart that I want. Fine then. I'll do this. Hold on a sec. SOFR demand for Friday. Okay, here we go. So this was... Give it just a sec here and we can pull this up. Repo ops. There we go. There we go. So here's the actual demand for the repo facility. That was October's demand. And this is supposedly so far still today. I wonder what time this closes. You know, what... oh, let's see here. Close time. Oh, 8:30 a.m. Oh, well, that's... Oh, okay. Well, let's see here. Release time, 8:15. Close time, 8:30. Today's afternoon SOFR operation will have an aggregate operation limit of 500 billion, basically. 500 billion less than this morning. So let me see here. Huh. Submitted. Yeah, well, it definitely dropped again this morning. Operation settlement time, maturity date tomorrow. That'll get you overnight. From tonight to tomorrow. So you had a big jump for the weekend. I think, though, this is what's creating some uncertainty is like, why did you have so much demand for money over the weekend? Right? All this really is a liquidity concern. It's this fear that why all of a sudden are we seeing such a demand for money? That's what makes people nervous. Are the banks getting screwed on their private credit deals? Or do they have more bills than they anticipated? You know, what's going on? That's what people always freak out here. Yeah, and then look at this. The 10-year is rocketing right now. So if I go out to the last 3 months, a nice little move up again here on the 10. Interesting. Very interesting. Okay. Let's briefly listen to here before we get to Goolsby.
One of his last strategic plays for the company. He had really earned a fantastic reputation for himself in the smartphone arena, but he wanted to succeed in EVs too. Remember, this is something that Apple tried and wasn't able to pull off. Xiaomi has actually designed a very good car. They've been able to succeed in the market. They've been able to gain some traction in that space. But Wang was one of the key employees who was responsible for redesigning stores as they were shifting these stores from really showcases for smartphones to something that could show you a full-size automobile that would have the infrastructure to be able to show that off and demonstrate what kind of cars they actually had. So at one point he was responsible for 267 stores. He was working almost nonstop hours. His wife told our reporter that he would frequently work until the wee hours of the night. We also saw his WeChat messages where he was exchanging messages at 2:30 in the morning and working on and on and on. And as you mentioned, tragically, at the age of 34, he died of a heart attack. Yeah. And so it's a story really about how these extreme hours can take a toll on managers, especially in an area so competitive like technology.
Xiaomi has responded in part to our investigation and talking about their sympathies that go to the family. But set this in the context of 996, of what is very much a cultural focus on working extremely hard in China.
I don't think they got anything fun over here. Let me check over here.
Well, we appreciate it. And we always spoke to your father, who's now negotiating peace deals about the New York City real estate market. But what are the stakes here with this election?
The stakes in this election, I know people say this all the time, but in this case, I truly feel it's never been higher. Zohran Mamdani's policies are going to be very destructive for the city. First off, he has no experience running a city with over 300,000 municipal employees and a budget of over 110 billion.
There's literally nothing going on the news. So I think Goolsby will be our best bet in just a moment. All right. So Bitcoin now recovering. Look at that. Kind of hitting a little bit of a floor right here. So IREN keeps bleeding. Most of its enthusiasm has been priced into the day. And just consolidating on the queues. Low volume consolidation on the queues. Very interesting. All right, let's go now. So we saw SOFR, we saw the liquidations on Bitcoin. And then obviously we've got the ADP catalyst coming up. Oh my gosh. Trump says he has no idea who Binance's CZ is after pardoning him. Lol. He just lined your guys' World Liberty financial pockets with like billions of dollars. Wow. He knows nothing about CZ. Right. Ask on 60 Minutes. Okay, are you ready? I don't know who he is. My sons are involved in crypto much more than me. I know very little about it, other than one thing. It's a huge industry. And if we're not going to be the head of it, China or Japan or somebody else is. Nice, Trump. I was told about it. Yeah. This is the thing. If you can throw money at, you know, some of the Trump disciples, Trump just does what the people around him tell him to do. That's crazy. That's crazy. Oh, yeah, I was told he was a good man, and this was a witch hunt. Yeah, whatever, dude. Whatever. Okay, good. So, we'll hit ghouls. I want to see if there's anything else from the suits before we hit ghouls. Okay, here we go. So, let's see. Suit news. The suits. The suits. The suits. The suits. The suits. Investors increasingly punish missed earnings. Yeah. Okay. That's good. All right. Let's see what we have here. So, investors increasingly punish missed earnings. Earnings season was the strongest in years, yet investors aren't rewarding good news. 70% of companies have now reported profits are up 13% from a year ago, almost twice the preseason forecast. Sales are rising at their fastest clip in 3 years. Oh, these are actually great notes. We should write these down. Let's write some of this down. So, earnings. We'll call it like a little earnings summary. Earnings summary. Okay. So, we've got a 70%, 70% of S&P 500 companies have reported. We have profits up 13%, twice the pre-earnings estimate. And then we have, let's see here, volatility, small missteps, got punished. Sales up at the fastest rate in 3 years. Margins up in nearly every sector. That's wild. Investors are growing sensitive to downside risks. Misses drew sharper hits. Well, worse. Misses got punished more. Misses got punished more than historically, per the Doomers. The Doomburgers. Weak breadth is a thing a lot of people are talking about. Let's see. Beats aren't being rewarded that much. Declining breadth in the current rally isn't simply a debate about the economy. It's earnings quality and leadership concentration. The market is chasing secular AI and the cleanest cash flow narrative. Yeah. I mean, that's a good point. So I kind of agree with that. Weak breadth. Why? Market chasing AI with strong cash flow, right? I agree with this. I think this is why crypto is so weak right now. I think that's why Bitcoin is so weak. And I mentioned that earlier as well, that I think people are looking at, hey, I want to be, they want AI exposure with the lowest risk. So high cash flows. And see the insane margins at companies like Microsoft, Nvidia, right, etc., as a place of both security and high growth. Now, those two things usually don't go together, but it's very impressive. And on a PEG basis, like, you could justify it. You can also justify the valuations on low PEG ratios for, Meta, Microsoft, Nvidia, Amazon, etc. Because, Wall Street growth estimates are so high. That's the thing. It's like growth estimates are so high for forward earnings. If forward earnings collapse, like what you really would need for this to crash, you really need forward earnings to collapse. And, today, I mean, how much was the IREN deal worth today? The IREN, I think, was it 9.8? Let me see here. IREN. So the IREN deal was worth 9.7. I was so close. $9.7 billion IREN deal with Microsoft for Microsoft compute power. Then you had the $15 billion in Google bonds, which I wonder if those are going to be backed. Dell's jumping on this too. I wonder if the Google bonds are going to be backed on their balance sheet, or if they are going to indeed be like Meta and XAI. Oh, $22 billion in bonds now. And then Amazon. So then we got the Amazon $38 billion 7-year deal with OpenAI. And then, of course, we have $22 billion. Let me see here. Alphabet is selling $15 billion of bonds in the US, 7.4 in Europe. Wow. Selling bonds 3 to 50 years. Goog selling 3 to 50 year bonds worth up to 22 billion, 15 bill US, 7.48 bill EU. More than expected. Alphabet's earnings show surging demand. Meta sold 30 billion of notes. Right, but Metas were off balance sheet. And then they got hosed for that. Right? Meta got lambasted for those. Meta got hit for their bond sale. Ironic that now Goog is doing it as well. Though Goog's appear to be on balance sheet. I'm not 100% sure about that, but so far it doesn't look like these are off balance sheet. Alphabet's latest bond sale. No, company may use the proceeds to refinance debt. Yeah. Yeah, this looks like it's a regular balance sheet backed bond sale. Unlike Meta, which is able to have this bond sale, build a data center for them, but not show up on their balance sheet, which is just wild. But that somebody else is taking the risk on it. Okay, so let's see here. Crypto vulnerable to $100,000 mark or dropped through it. Some recent crypto weakness may be blamed on the stronger dollar, but there's reason to believe that even renewed currency weakness may not help. 120-day correlation between Bitcoin and greenback is now negligible. I think there's a lot of leverage right here. So, add to this massive leverage, which is in stocks as well, but I don't think you're seeing the downrights of EPS forecasts yet to justify selling off. State jobless data. Oh, here we go. Let's see here. Do we have this yet? No. It's pretty stable. Practical level. Claims suggest another reason for caution. Jobs not holding up. There's usually an uptick in claims at this time of year, peaking around the start of January. So far, seasonal change isn't showing up. Well, that's good. September. Oh, they're comparing. Okay, I get it. Here, I'll show this. It's actually kind of interesting. Can I get it to show? What's the button? Windows. Yeah, there we go. Stand by for the claims. This is quite interesting too. Jobs. So it's actually this is bullish jobs. Once I can get the darn thing to load. Yeah, it's not loading. All right, whatever. Give it a sec here. Okay, fine. So, let's see here. Can big tech companies or shareholders afford this? That's just to talk about the spending that's going on. Big deal, big deal, big deal. Treasury account, ISM, narrow strange in history, fine, dollars momentum, blah, 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 blah. Well, that's all boring. Oh, there we go. I got that jobs data. So that's right here. And basically what you're looking for here is no October spike in state claims levels yet, which is bullish, right? We don't want to see that yet. It's just like we don't want to get a bad ADP report this week. So that's pretty good. Palantir reports today. We know that. We saw the Kenvue buy. Okay. Cool. Let's see how the market's doing now. Okay. So over here, we have, yeah, we got a little bit of a rebound over here. So how did the crypto liquidations go? So the 1 hour rect has now moved. The last 12 hours, almost $1 billion of longs got wrecked. A lot of that, I would say, what we just saw this, like 600 million of it was within the last hour and a half. Most of it, again, on hyperliquid. You know, Binance is really becoming way less of a player in the super longs. Wow, look at this. 99.3% of people are long on hyperliquid. Or maybe that's of the liquidations. Yeah, I mean, that makes sense because obviously we had a price decline. All right, so that's not that big of a deal. That doesn't mean that 99% of people are long there. It just means that 99% of those who got liquidated were hit here. Okay, so very well. All right, back to the sticks. Tesla chilling out a little bit before the vote. Microsoft's barely up. Carvana's actually doing nicely. Look at this. Carvana's bouncing. Oh, you got all the way down to the line. My line's at 296 on this. We got to 298. Within $1.13. Within $1.13 we get the bounce. Not bad. Q's barely holding on today. And interesting, you've even got Rocket Mortgage that's going green on a day where rates are up on the 10-year. Nvidia's just straight sideways. Oh, Symbotic declined a bit. Look at that. Symbotic's just been on a tear. Rockwell Automation, Starbucks, Ubiquity's down a smidge. So is Axon, actually. Alt 5. Wow, another 12% on Alt 5. It is going to zero. Well, it's up from 180 from where it was, but that's how they go back to selling. All right. What else? Let's find out. I still want to listen to Goolsby. We will do that in just a sec. Let's just see what else is here.
World, and they're having a hard time supplying that demand, and therefore I think you're going to see more of it. And by the way, people are worried about this off-balance sheet financing. In my opinion, it's dangerous if you don't know about it, but everyone knows about it. So you can definitely put that into your calculation for, the valuations.
Yeah, but how much do you write it down? It's more than that.
In many ways, Meta has led the way in that creativity, and Meta got beaten up last week because of their capital expenditure and perhaps it coming in a more rapid.
I mean, I guess maybe you don't have to because, again, when it's off balance sheet, who cares? If everything goes to poopy doopy, it's not Meta that has to pay the bill.
Yeah, with regards to Meta, I think there were a lot of things that were idiosyncratic. I mean, if we were to think about the cap stack, if debt is issued, equity investors don't like it, right? But if you look at the debt market, a lot of investors in the debt market actually liked it, and there was a lot of demand for it. But there was also the deal about Meta not being a hyperscaler, investors wondering where all of the investments are going, and they're going to invest more of it. So that's Meta, but everyone else, I think there is a race here, and there's a bit of a FOMO in all of the AI players, and there's a higher risk to missing out than to spend today and to see where we are tomorrow, because I think the demand is still going to be high tomorrow.
But is that FOMO leaching into the investment community, and is that a good way in which to invest one's money?
Right. So here are a few things. I think people thinking about valuations, and that's myself included, it's very, very high compared to historical norms. It's nerve-wracking, but it's a short-term, sentiment-driven play. Data is subject to a lot of noise, and it's going to happen. There may be a correction, or people are going to get nervous. However, if you're a long-term investor, like a lot of our clients are, you're going to take a look at the fundamental value add of these, data center build-outs and AI moves. And I do think that there is something there. If you look at the S&P 500 index and the companies in there, how many can actually do the AI play? How many of them have the expertise, the vision, the balance sheet capacity to do all of this? And they're just a few. And that's one of the reasons why investors who want to put capital into the AI play have no choice but to go into it in the public markets, right? So I think the valuations, although they are high, they're telling us something about the future growth of these companies and AI in general.
And that can withstand what has been a torrid time of geopolitics, of angst, of trade. And Anna, I think it's interesting that you said it's noisy. It's been really noisy in other players, like rare earth stocks, for example, tumbling today because, well, maybe China will continue to export, and many had run up MP materials and other players thinking that we would be cut off.
Well, we know that was overdone. I mean, that's old news on MP material. Okay, so nothing super exciting there in the way of news. Okay. Let's see here. Okay. All right. So what we're going to do now is do a breakdown of all of this, including the Goolsby video. And then we'll go from there. Okay. Cool. Let's break it all down. All the news this morning, as well as what's going on. Expectations for the jobs report coming out this week. So okay. All right. Well, let's cover all this good stuff. Do I have any coffee left? I have a little bit of coffee left. Oh, thank goodness. All right. Well, Austin Goolsby from the Federal Reserve has some news for us, and we're going to talk about that this morning, along with what's going on in the economy and the lack of activity that's actually showing up in the jobs report, which is really bullish, at least so far based on state unemployment claims data. We're not expecting to see a big shocker, but that's not changing the fact that we are seeing shockers at the repo facility at the Fed. So how do we reconcile this? How do we put all of this together? Well, let's break it all down one step at a time. So the first thing that we've got to know is that this week on Wednesday, we are going to get a combined ADP report. So mark your calendar for Wednesday morning at 5:15 a.m. California time, 8:15 if you're lucky and you're on the East Coast. The ADP report is going to give us not only the moving average of the last, sort of the weekly, last 4 weeks of data, which is nice because we get the weekly data hopefully going into a little bit of November, but we're going to get that entire October read for ADP jobs. We're expecting 35,000 on that ADP report. Now, a lot of folks are saying that's going to be what actually decides whether or not we get a December rate cut. Right now, we've got about a 69% chance of a December rate cut. And a lot of folks are thinking that we could be on the precipice for some real pain if we keep seeing this sort of funding stress. See, this right here at the Federal Reserve is why they turned off the money vacuum cleaner, because we're starting to see a little bit of a lack of liquidity. Some of that might be why we're seeing pressure in Bitcoin. In other words, in order for people to continue to buy these high-flying tech stocks like Nvidia or invest in AMD or otherwise, there's some argument that because Bitcoin has been trading sideways since the summer, people might be finding liquidity in Bitcoin and then moving it into tech stocks or wherever else. The repo facility doesn't tell us about liquidity for you and me, though. What it does is it tells us about liquidity for banks, which sometimes can be even more concerning. Because why all of a sudden are we seeing the repo rates or repo usage skyrocket? And why did we just see the largest increase in the repo rate since 2020? Now, this rate itself isn't that big of a deal, 4.22 on the repo rate. What matters more is the rate at which it changed. Usually this repo rate only changes by about 4 to 5 basis points at any given time. However, here we had an 18 basis point skyrocket in the repo rate, which suggests way more of a demand for cash on Halloween on Friday than markets anticipated. Part of that could be because of pain brewing under the surface. And this is why we're not really seeing this kind of pain yet in the labor market. Even though we had layoffs that showed up at Target, at Amazon, and at other companies, we're not actually seeing that pain show up in the labor market yet, but we are starting to see red flags in liquidity markets, which might actually be very normal. See, typically, when you go into a recession, the most lagging data is the unemployment data. But in a weird way, the unemployment data is like the only thing the stock market cares about right now. The stock market is looking at the unemployment data saying, hey, as long as we're roughly in the range of break-evens, we're bullish, right? That's essentially what markets are doing. Jerome Powell's got the break-even employment rate somewhere around 0. You've got Fed members like Hammock who have the Fed unemployment break-even rate estimate somewhere around 20,000. The estimate for ADP this Wednesday is that we're going to get 35,000 jobs. And even if we miss on 35,000, as long as we get something between 0 and 20, markets are likely to look at this and go, hey, cool, bullish. Especially since even after these layoffs, we're still not seeing initial jobless claims on a state basis show any kind of even a seasonal spike. I mean, look at last September and October. At least you had a spike in unemployment claims here that sort of aligned with what you generally get around this time of the year. Now, right now, not seeing the spike at all. And so, in a weird way, we kind of see markets continuing to throw money at AI and the tech trade because we're justifying that the economy is fine because our unemployment rate hasn't fallen off a cliff yet, and so far earnings are doing just fine, which is fair. So far earnings have done fantastic. 70% of the S&P 500 has reported. Profits are up 13%. The estimates were closer to 6%. That profits would be up 6%. We got 13%, which is amazing. Sales are up at the fastest rate in the last 3 years. Margins are up in nearly every sector. And the only thing that people are concerned about right now is that things are so bullish with labor and earnings that we just don't have enough money. That's what's leading to record amounts of leverage, the highest levels of margin debt we have ever seen, and obviously why, when we have any kind of hiccup, whether it's in crypto or stocks, we see really rapid declines. I mean, look at this. Just in the last hour and a half, this just updated, but within the last hour and a half, we actually had this chart showing about $600 million in crypto liquidations as Bitcoin fell below 106,000 for a moment there. That chart has since moved, showing only 46 million in the last hour. That's because within the last 2 hours, most of those liquidations took place. You can see the 4-hour rect level here, almost 700 million. A lot of that, of course, on Hyperliquid, almost 2.5x that what we've seen on Binance, who, of course, Binance has no idea who CZ is after pardoning him, because why would a president know anything about the person who he's pardoning, and the same person who just happened to provide a multi-billion-dollar lifeline via tokens to World Liberty Financial in coordination with the Saudis. But that's really a topic for a totally different video and totally tangential to what we need to talk about, which is, Kevin, how the hell do we put all of this together? Well, I think there's actually a very simple explanation. I think the way you put this together is like this. Look, jobs right now, still fine. And that's what's keeping the market going. The problem is, people just don't have that much available cash. Money markets are misleading. A lot of people look at money markets and they're like, oh, but Kevin, market funds have so much available cash. But they forget that a lot of that cash is really just corporate balance sheet cash, like Apple available cash or Nvidia or Microsoft available cash that sits in short-term duration money market funds or 3 to 6 month treasury funds that then end up being deployed into stock buybacks or circular investments into OpenAI or Amazon or whatever kind of other deals end up getting financed. So the money that's available in money markets, I don't actually see it as consumer available money or investable money that's available. You even see the Bank of America Fund Manager survey shows that currently available cash for fund managers is at a dangerously low level. In fact, Bank of America calls it a bearishly low level because typically when investable cash gets as low as it is now, we tend to see a pullback in markets. So to me, this isn't so much about the jobs market being bearish. The jobs market so far is bullish. The problem is, it is lagging. The jobs market tends to lag bad news. The lagging bad news, in other words, good news right now, is actually keeping the market pumping. The problem is, again, cash and liquidity. And what's amplifying that lack of cash? Well, what's amplifying that lack of cash, in my opinion, too much collateral risk. In other words, too many cockroaches. And I actually think that's why we're seeing some of this funding stress starting to show up over here. The usage of the repo facility is basically when banks say, crap, we don't have enough money to meet our obligations over the next 24 hours. We need to borrow more money rapidly from the Federal Reserve. This skyrocketing on Halloween is also interesting because it comes after the Fed meeting last Wednesday where the Fed says, hey, we're going to turn off the vacuum cleaner. Now, in fairness, they're not turning off the vacuum cleaner until December 1st. But honestly, if we keep seeing crazy spikes like this in lack of liquidity at banking institutions, it's likely that the Fed is going to actually have to move up the time that they turn off their vacuum cleaner from December 1st, potentially to like now, because there is a liquidity strain. When banks have liquidity constraints, it's usually because banks are starting to get more nervous. Think about it. If banks get more nervous because they're like, what if all this collateral isn't really worth what we're being told it is? What if there are more cockroaches that we've lent to than we thought? I mean, keep in mind, you have to remember that the IMF made it very clear that 90% of the lending going to these risky institutions, these non-bank intermediary, financing institutions, comes from big banks. So that means big banks are potentially the most at risk if we end up having stress on those underlying collateral values. That's why we saw Jefferies tank, JP Morgan still at all-time highs though, but oftentimes people look at the repo facility and say, I don't know, man, these could be signs that there are brewing underlying concerns about what's going on in the market. It's probably one of the reasons why we've got the Bank of England saying there's a real risk of a, quote, sharp market correction. The IMF says that valuations are so above fundamentals that we do risk a disorderly unwind, and that even Jamie Dimon says we might be entering bubble territory. All of that is fine. Like, people make bubble warnings and they create all these sort of like, crash scenarios all the time. None of it usually happens unless there's a lack of cash. And part of this, in my opinion, all aligns. The repo facility is showing liquidity in crisis. There's not enough money at the biggest institutions. They're panic borrowing from the Federal Reserve. That's one. Number two, you're seeing a slowdown in Bitcoin. Usually when we have excess liquidity, we see Bitcoin absolutely kill it. But we're seeing the opposite right now. Now, of course, we do have idiosyncratic movements as well. I mean, obviously, something that we're anticipating in the Alpha report, in the course membership, is that Tesla might knock on the door of $490. I think that'll be a psychological barrier, but also an all-time high barrier and a technical barrier once this vote passes for Tesla. I anticipate that the vote will pass. If it doesn't, I think 414 is in play, and we might even lose 414. But I do anticipate this will pass, and so I think that's why Tesla is sort of pre-front-running this event. And then, of course, it's no surprise that when we get sort of these idiosyncratic news deals like what you see with rare earths, you end up getting sell-offs continue on stocks like MP Material, which my target for MP Material is $31. I hate to say it, but we talked about this in the Alpha report back when we were at 65 and 70. We said in the Alpha report, hey, MP Material might be going to $100. Now we're saying we peak out at $100, which is exactly what happened. We said that before it happened. It happened. Now our target's $31 on MP Material. I think it's just going to be too long for us to get revenues over here. And people are looking for cash. This is why it all relates. Is in order for people to keep chasing plays, like, who knows, Palantir reports earnings today. We'll see. We talked about that in our course member live stream this morning as well. But beyond that, people need cash. So in order for people to go chase the trend that's going on at Amazon and this enthusiasm we're seeing, this recent enthusiasm that we've seen at AMD, in order for people to keep chasing Nvidia up, they need to raise capital from somewhere. Where do they raise capital? In my opinion, one of the places is Bitcoin. And it all comes down to a lack of cash, which does make us somewhat sensitive to a potential correction in the near term. Now, when does that correction come? In my opinion, the biggest risk for a correction isn't tomorrow. It's actually when the government reopens. Now, I anticipate that the government will reopen before Thanksgiving. I do not think that they want air traffic controllers gone for the biggest travel week in the entire year and Black Friday sales, which, the economy really relies on the consumer. And consumers have been weak. So do you really want to screw that up? I don't think so. But I actually think that's the biggest negative catalyst we have is the government reopening, because then we actually start getting real data again. Now, we'll get the ADP report here on Wednesday, and we'll be covering it, obviously. But there's a lot of focus on where's the money. Obviously, layoffs, we're going to see, are these layoffs going to show up? This will be a big deal because ADP is a contractor for Amazon. So we'll see the payrolls data from Amazon probably show up in the October report, assuming some of those layoffs have not just been announced, but have actually started showing up on like payrolls data. But Starbucks firing 900, Target 1,800, Amazon 14 to 30,000 because it's as many as 30,000, Paramount 1,000, Molson Coors 400. These are all issues. At the same time, you've got people like Goolsby saying, I don't know, man, inflation's still a concern. Nah, I don't think so. I think you've still got room to run between now and the end of the year. I do think you have a negative catalyst with the government reopening, but broadly, earnings are good. Jobs data still good, but we're getting early warning signs that people are just straight up running out of money. Okay, that's basically what's going on here. People are out of freaking money. And I think as a result of this, some people are starting to sell some assets like Bitcoin. That's my take. We're seeing selling pressure there, obviously. Bloomberg this morning, they had a piece about how they think that Bitcoin's actually going to fall under 100,000. They're going to break right through 100,000 and fall below it. That was in the Market Live blog. But, I'm not trying to be a Bitcoin bear. I'm just saying, I think people are selling to be able to go buy some other stuff that they want to diversify into because there's just no other money. So you have to sell some assets. I think that's what's happening. That's why you got the MP sell-off. That's why you're going to keep seeing sell-offs certainly in scams like Alt5. I mean, Alt5, the only reason Alt5 goes up is, in my opinion, because insiders stop selling. And then as soon as it goes up again a little bit, it tanks again, down another 13%. My price target, by the way, on this one is delisted. 0 is my price target on this. I've been bearish on this since $7 or $8. Mostly because I think it's a scam. My opinion. Don't sue me, bro. But anyway, what matters now is let's listen to the Austin Goolsbee interview. I do want to quickly shout out that HouseHack has had its most insane 3-day fundraising in just the last 3 days. Like the last 3 days, I think we're at like $500,000. We fundraised, I think it was close to 1.4 or 1.5. I gotta look at the exact numbers, but it was either 1.4 or 1.5 million dollars in October, which is great. But in the last 3 days, we raised nearly another $500,000, which then if you, like, I don't expect we would multiply that over the month, but then you compare that sort of to a month basis. Like, the rate of fundraising is insane. So I just wanted to give a quick little update on that. This is not a solicitation. If you want to learn more about investing in HouseHack, also now doing business as Reinvest, go to reinvest.co or househack.com, read the solicitation, read the offering circular. But I just wanted to thank the audience here, and I want you to know that my goal is to make this, like, I want to take Warren Buffett's torch and make this Berkshire Hathaway. For the next, 70 years, I want to grow this puppy. Maybe we'll do annual shareholder events like Berkshire over time. But anyway, let's listen to Foolsby over here, and we'll add some commentary onto what he's fooling about.
The policy meeting that you were somewhat uneasy about front-loading rate cuts based solely on slowing payroll growth, and that at the same time, inflation had been moving in the wrong direction, and just counting on inflation to be transitory made you uneasy. So why did you vote in favor of cutting rates last week? Was there anything that changed?
Dude, they all got pressured. I'm convinced they all got pressured. Schmidt had the balls to vote no, but Hammock, Bostic, and many of the others are just like, I didn't want to, but I did anyway. Like, you weenie babies.
That caused you to want to take out more insurance?
Well, before the last meeting, not this November meeting, but in September, we issue the statement of economic projections, our dot plot projections of where the economy is going to be and where rates are going to be.
It's actually a summary of economic projections. I'll give him a pass on that because he's kind of like newer on the board over the last year.
And at that time, I thought there would be 2 rate cuts for the year. I'm balancing off 2 things. One, as you know, I believe that the place rates will ultimately settle is a fair bit below where we are today. And as long as we can get the dust out of the air, I still think that golden path is possible. And I'm trying to weigh that off with these concerns about front loading, especially when we have the data shut down. We're getting some information about the job market, and we have very little private sector information about inflation. So I think we want to be wary, but I'm still just trying to balance those off.
I will say the data we got this morning, by the way, was not bad. It was a little mixed. But I would say it leaned bullish, right? I mean, like S&P Global Manufacturing this morning, fastest demand growth in 20 months. And the pricing data, while it was still growing, it grew slower than expected, which is good. Lower, basically, inflation than expected. And employment growth was modest. That was the S&P Global, which this one leans definitely bullish, although they do talk about an unprecedented rise in unsold inventory, which could trigger a down move in manufacturing. That was S&P. ISM was a little more bearish. New orders contracted for a second month in October following 1 month of growth. Backlog index rose, blah, blah, blah. Again, also a mixed report. Like if you zoom into it and read it, it's kind of like, okay, this isn't, like nothing is telling us we're falling off a cliff. Labor data doesn't say we're falling off a cliff. Earnings certainly don't say we're falling off a cliff. These manufacturing surveys don't say we're falling off a cliff. I get why the Fed is cautious. The biggest concern, like red flag to pay attention to right now, is liquidity. I actually think they got to turn off the vacuum cleaner early, and they might do that because if they don't, you risk a shock right around the same time as the government reopens. So, like, part of me is like, if I want to trim stock, I'm kind of tempted to do so, like, almost right before the government reopens. if you wanted to trim stock. I'm not saying that as a way of saying like, oh, sell or whatever. I'm saying that as a way as if you are looking to, why do you sell stock? You would sell stock if you want to diversify. A lot of people, they look at their portfolios, they're like, dude, I've had such runners on some of these stocks, I'm going to diversify, And I'm not saying that's, go invest in house tech or whatever. I'm saying maybe you want to buy a different stock or you want to buy a house or you want to pay down some debt, right? Like those are all reasonable reasons to sell stock, or you've got some tax liabilities, right? Like maybe you made a killing this year and you invested in the stocks and you made even more of a killing. And then you're like, all right, well, now I got to pay taxes in 2026, so I'm going to trim a little bit for taxes. Those are reasonable things to do. Like, I'm going to have a massive tax bill, and that's okay, but that doesn't make me bearish. It just means I'll take some good opportunities and trim a little bit, Why not? Anyway, let's keep going here. Kevin, you must hit play. Apparently, you can't use the space bar on Yahoo.
Not much change since the September SEPs. And so I had no problem with that.
So, Austin, you're saying you're trying to sort of look through all this dust, waiting for it to
in other words, no big red flags yet. Okay, fine, Goolsby. Give us some more. Talk dirty to me, Goolsby.
Press conference that there's a feeling that you've cut twice and you're now 150 basis points closer to neutral than you were a year ago.
Yeah, somebody here in the chat says, with so many layoffs, I don't see how the jobs numbers can't go up. Yeah, I mean, remember, the 27-week unemployed thing is a concerning chart. It's all about absorption, though. It's not just about layoffs. You have to think about the process of layoffs. Layoffs can get announced in October, but that doesn't mean the data is going to show up in October. It is entirely possible that these people get a severance. They don't end up filing for unemployment until January, and it just sort of butters out when they apply for unemployment. And as long as they get absorbed somewhere else, it's good. So you can have layoff announcements. As long as they get a job somewhere else, it's good. But we don't know that yet, right? So just using layoff announcements, that ain't going to cut it.
Perhaps maybe you should wait. Are you one of the chorus?
I'm not supposed to say anything about what other folks say. In my mind, as you know, I am uneasy with front-loading rate cuts. I do believe rates will come down, but in a way, rates should come down with inflation. We've got to, if we're just going to count on the inflation that we've seen here, where the last 3 months core inflation is running 3.6% at an annualized rate, and core services, I think, are running close to 4% as annualized rate for the last 3 months. That's worrying because that's going the wrong way. Oops. If we're just counting on that to go away because it's transitory, that makes me uneasy. So I'm not decided for what I think about the next meeting, and we are still going to get at least some private sector observations and the Chicago Fed's labor market indicators telling us some about the job market. We're probably not going to get much on the inflation side, so I am a little wary, and my threshold for cutting is...
And mind you, he's referring to the 12-month data, right? The 12-month or the annualized 3-month data. So, what you could do here is you could kind of look at Nick T. And Nick T usually gives us good charts. I'll go ahead and pull it up while he keeps yapping. But multiplying by 4 is essentially what he's doing in the last 3 months of data. Powell downplays this. So he's more of a hawk here on inflation than Powell is.
Higher than it was in the last 2 meetings.
So to your point, Fed Chair Powell used the analogy of when it's foggy, you want to slow down, become a little bit more cautious. Is that a fair characterization for you? And how are you viewing the balance of risks? Fully recognizing that we haven't had official data on the labor market side because of the government shutdown. It sounds like you may be more worried about inflation than employment now when you look at the balance of risks.
I've been a little more worried about inflation than the job market if you think of it as a balance of risk, for the reason that other than payroll job growth, if you look at things like the unemployment rate or other rates that are less affected by population changes or immigration policy, those things have been pretty stable for some time. If you look over the last 12 months, the unemployment rate has not been going up. We haven't seen a big uptick in layoffs, which if this were the beginning of recession or deterioration of the labor market that was rapid, you would expect to see higher layoffs or firing. We haven't seen that.
I feel like that's such an awkward thing to say right after Amazon just announced 14 to 30,000 layoffs, Target, Molson Coors, and a lot of companies. So it's a little awkward. I know those numbers haven't shown up yet, but I'm surprised he's not at least saying something like, well, but I mean, that could change, so we're watching it. No hedging there at all. Here's the screenshot that I was going to pull up. This is what he's referring to with inflation, just so you know. So this is the 3-month rate, but it's multiplied by 4, so it's annualized. And so what he's referring to, if I grab an arrow here, is see this core services X housing level right here? That has moved up very nicely, which isn't great. In fairness, on this 3-month, it's extremely volatile. So I think you could take that with a little bit of a grain of salt, because if I put sort of a line through, I don't know, maybe like a line of best fit over here, you could see it has been trending up. And this goes all the way back to 2018, but it's not that unusual. And in fact, if you just draw the line since the pandemic, it's kind of doing this, right? So this would probably be a better best fit right there. That would be for the light blue color. Housing inflation is basically going straight down. And then this is where you're seeing tariffs, right? So Powell tells you this line right here is because of tariffs, and that's going to be transitory. Powell says the housing component is coming straight down. And while core services X housing are up, they're also trending down. So you can kind of see how these two people are interpreting the same damn chart in different ways, which is just annoying. I personally lean towards the, this idea that over the next 10 years, we're going to see massive disinflation, if not even deflation, just because the economy will continue to slow bleed, not necessarily fall off a cliff.
There's still concerns on that side. And as you say, we're going to get some private sector data, so we can at least keep observing that. But I just want to emphasize, be very careful at moments of transition where you're trying to figure out whether the economy is turning, relying too heavily on 12-month backward-looking numbers like the 12-month trailing inflation. Each month we get a number, and 11 of the months we already
talking up why I'm using 3-month annualized.
Last 3 months inflation is not going down, but is instead going up, including in some categories that are not driven by tariffs, like services. Those are areas of concern. And so that's a little bit,
Right, and we saw that downtrend, the longer-term downtrend on it.
Sitting in your front yard. So before you let Fluffy out to go run around, just let's at least get one more look.
All right, well, aside from Fluffy, I do want to come back to the job market because, yes, payroll growth did slow over the summer months, and since then you sort of have been in the dark as far as official data. But last week we saw some...
Somebody has a good question here. They say, hey, Kevin, that Renovo company going bankrupt, being backed by private equity, was that another squeeze for cash? Typically what happens, okay, I'm just going to give you a quick example of how quickly poop hits the fan. And this is why the repo market and that liquidity constraint matters, okay? I'm going to make this really simple. I'm going to make it so simple. I need to get a whiteboard. Who was here for the whiteboard days? Maybe this is a bad idea. But I feel like it's fun, all right? So here's how this works. I'm gonna take this beautiful Meet Kevin pad here, and I want you to pretend this, okay? I want you to pretend that I'm a contractor, and I have a $10 million business line of credit, also known as a block, okay? Let's assume I have a $10 million business line of credit, and that's what I use to pay my employees. This is how a lot of contracting firms work. And that Renovo firm that went bankrupt, that was like a roll-up of like 6 or 7 different companies. they might use individually many different business lines of credit to support their business operations. And so what happens is, if, you basically send your workers to go work, then they do their work, and then you bill your clients. And if the clients are slow at billing, you have to rely on lines of credit just to survive in construction. Construction is a very, very expensive business. Very easy to go bankrupt in construction. The problem is when banks start having concerns about underlying companies, banks start closing lines of credit. That's the worst case scenario. If there is a credit crunch where all of a sudden banks widely start saying, yeah, you have a line of credit, good one, bro. Hey, your line of credit, it's going to be gone in the next 30 days. Banks do this. Banks do this when they start panicking, when they start getting nervous. And they have the right to do that. They have the right to rug pull you. What happens? Well, the underlying businesses go, well, I guess we're going bankrupt then. So where else are you going to get debt? The lines, it's always debt. Every recessionary cycle is debt. There's a reason why Kevin is debt-free right now.
Major layoff announcements from the likes of Amazon to UPS. If you did look at private sector data, ADP's measure turned negative for the month of September. We're going to get another measure this coming Wednesday. And the Beige Book revealed that employers are looking at cutting headcount either through attrition or layoffs due to policy uncertainty, weaker demand, and AI. Does that not worry you? Do you think that perhaps payroll growth has decelerated further since you have gotten official data?
It might have, and that's why, as I say, I'm not decided going into the next meeting. I want to see how things are playing out. I do think the public announcements of layoffs, you would expect, if that is an immediate business cycle driven matter, that you would start to see an uptick in the official unemployment insurance statistics or the layoff statistics, or you would get Warren Act type data of that.
It's lagging, bro. Goolsby, you should know this. You of all people, you work at the Federal Reserve. You should know this. Unemployment claims peak after the recession is over. Think about what I just said here. Unemployment claims, so initial claims for unemployment, they hit peak after the recession ends. Kind of crazy, right? But look at it. Watch this. Look at this. 1970s, peak unemployment claims at the end of a recession. Peak unemployment claims, end of recession. Peak unemployment claims, end of recession. Peak of unemployment claims, end of recession. Here, at least in the dot-com bubble, we had a rise of unemployment claims going into the recession. Guess where the peak was? After recession. Guess where the peak was in 2008? At the end of the recession. So, that's the biggest concern right now, is that you have people literally at the Federal Reserve who are like, well, unemployment claims aren't going up yet. Yes, we know that. But we also have to remember, even though the stock market loves this lagging data because it gives us more reason to be euphoric, once it starts going up, you're actually probably at a worse point, or you're deeper into the recession than you actually realize. And this is why Donald Trump will probably be correct that the Fed's too late.
That would give you a little bit of a heads up of what was coming in the job market. I do think the hiring rate is low. That's among the weakest things in the economy at the moment. And that's made it particularly tough for new graduates and young people. But a low hiring, low firing economy is unusual. That's the kind of economy that you expect when there's a lot of uncertainty. Normally in the business cycle, you would have low hiring, high firing, or low firing, high hiring. When you get uncertainty, both of those go up as people kind of pull back and say they want to wait to see how things are going before they make decisions. This whole second part of what's going on in the job market, if it is being driven by AI, if it is concentrated in the tech sector, that doesn't feel as much like the business cycle to me and economic stabilization. That feels like more of a structural shift in what sectors are going to be employing people. So we'd have
Or
to
not
think
employing.
through what does that imply for monetary policy. That's a little different than if you were afraid that we were going into recession.
Yeah, so to your point, what is all of this telling you about the outlook for the economy in a cyclical sense, right? Not a structural sense, because that is what you have control over at the Federal Reserve. Perhaps are we at a turning point in the economy, given what we're seeing in private sector job market data, that GDP data is not yet reflecting?
Possible.
Yeah, look, I always say one of the hardest things the central bank ever has to do is get the timing right on moments of transition. And that's especially difficult if you have squished bugs covering the windshield and you can't see whether you're still on the road. And when they shut down the data, the official data, that's the circumstance we're in. So I don't know that it's decided. I'm not decided going into the December meeting. I am nervous about the inflation side of the ledger, where you've seen inflation above the target for 4.5 years, and it's trending the wrong way. I believe on the other side, rates can come down a fair amount. It would probably be most judicious to have the rates come down with inflation. So let's get some observations that document that inflation is coming down and that the uptick we've seen is transitory. But we've got to weigh that off. If the job market starts to deteriorate in a more significant way, then that would change the balance of risk.
Yeah.
Treasury Secretary Scott.
In other words, basically what they're saying is, as soon as they start actually seeing some of the unemployment data coming bad, they're going to cut hard. I agree with that. In terms of I agree that they're going to do that. And then it makes you wonder, do you start pre-positioning some of your portfolio for that eventuality? I don't know. That's the tougher thing. Those are the things we talk about in the Alpha Report.
Bessent said yesterday that he believes that parts of our economy, particularly housing, may be in a recession already. Sounds like you may disagree.
This was the CNN Bessent interview, where Bessent yesterday said, oh yeah, parts of the economy are in recession, or maybe going into a recession. You could even see it. I think it was just the very last minute. He was broadly optimistic, so I don't want to, I don't want people to feel like there's any misleading on what he said. He was broadly optimistic.
Joining us now to discuss
the video towards the end, he was pretty clear.
We've seen the biggest hindrance for housing here that are mortgage rates. So, if the Fed brings down mortgage rates, then they can end this housing recession. Low-end consumers who have gotten killed under President Biden, these high rates are hurting them because they have debt, not assets. Mm-hmm. So I think that there are sections of the economy that could go into recession.
Yeah, that was the big warning there. It's like, hey, housing's in certainly a volume recession, right? Not necessarily a price recession. That depends on which market you're in. Many markets are doing just fine. Some markets, Texas, Florida, not doing so well. But it basically saying, some of this with the consumer struggle could worsen if we don't cut rates more. Fed Daily right now was talking about this as well. She says, I supported the rate cut, and the 50 basis points that we have done so far makes us better positioned, and I have an open mind for December. So you have some, it seems like they're all just basically waiting for this ADP data now and at the beginning of December. So the next two ADP data sets, hopefully the job market reopen or the labor government reopens and we actually get our BLS data. Those are going to guide your December rate cut. Honestly, if you get bad data, you'll end up getting you'll get a 50 to a 75 basis point cut.
Agree with that? What are your thoughts on that?
Well, I think he's right that the housing construction sector's been weak. It has been weak now for some time. The three most interest rate sensitive parts of the economy usually that give you a sense of the business cycle are housing, consumer durables, and business investment. I think he's right to highlight housing's been weak. Consumer durables have been pretty resilient. And you saw, as you said, the GDP numbers coming in and consumer spending coming in pretty solid, and businesses investment has been kind of off the chain. Now, much of that driven by the AI boom, so that might not be cyclical, but the interest rate sensitive parts of the economy don't feel like they overwhelmingly point to that we're in a slowdown. I think that the economy has been pretty strong. The economy is pretty solid and has been. There's weakness in sectors, and anybody who's dependent on intermediate goods that the tariffs are applying to has been suffering. But other parts of the economy continue to grow, and overall consumer spending remains the main driver of solidity. Is that of the solidness of the economy has been largely based on consumer confidence.
Well, Austin, unfortunately, we're out of time.
All right, so this gives you a really big overview on the liquidity crisis that is starting. That's what we're seeing at Bitcoin. It gives you insight into why Besson warns that some sectors of the economy could be going into recession. It gives you Goolsby's fooling us on his reading of the inflation chart. It also shows you how backward looking the Fed is, as well as major catalyst for this Wednesday. This is a lot of information to put together, but I think it's useful because, you know, we basically just covered a whole lot of stuff about what's going on. And I think it all kind of honestly consolidates down to, like, just, you know, enjoy the run where there's money being made, but recognize there are little red flags that keep popping up. You know, the cockroaches keep popping up. And those are things to pay attention to. And does that sort of beget, hey, let's pay down some margin, let's reduce debt? Ice sinks soul. So, like, I guess if I would put a conclusion on all of it, I would say, look, obviously since Liberation Day, we have absolutely been crushing it in the economy. Trailing stops essentially haven't gotten triggered. We bounced perfectly off the 630 line. I mean, within 15 cents, that's basically perfect here on the Qs. Earnings are absolutely crushing it. Like, things overall feel good, especially at great companies and great parts of the American economy. There are many portions of the American economy that are just really suffering. Look at Dave & Buster's, look at Enphase. Like, some of these are just really bad. I mean, Target, some of these stocks are just going back to COVID lows. So it is really a two-tier economy. You really don't want to bet on consumer discretionaries right now. You really want to focus on where the money is being made. But there are already red flags starting to pop up that indicate we might be starting to run into a credit crisis with Fed liquidity problems. When that credit crisis hits, it usually hurts a whole lot faster than people think. Credit problems and freezing of credit lines or margin calls or whatever usually happen way faster than people think. And that's why I always say, I think you can never get hurt paying off debt, taking some money off the table, and just being cautious. You know, let you know, your long-term stuff ride, but de-risk a little bit, diversify a little bit. CK Jordan. No, you're actually totally wrong. CK Jordan says, Kevin has been on the recession train the past 3 years. No, you're actually entirely wrong. Let's be very clear about this. At the end of 2022, I said we were going to have a Nike swoosh recovery that would probably end in euphoria, which is exactly what happened. In fairness, I started getting nervous about the labor market last year. That's different than the last 3 years. That's very important because the Nike swoosh has really played out exceptionally well. And if you look at what we said in 2022, we said we'd probably have a Nike swoosh recovery with a euphoric end. I hate to say it, but look at what we're starting to get over here. A little scary because you're actually breaking above that Nike swoosh trend. You're getting that euphoric kind of tip. That's also a red flag. Important to remember that. Cool. All right, great. Awesome. So what do we have over here?
They take a while to show up. They'll trickle in over the next year or two.
Matt,
what'll trickle in?
Let's
Your
turn
mom?
to Bitcoin real quick. It was up 300% since BlackRock had filed 2 years ago. but it has had a kind of shaky last couple months. Some of the OG Bitcoiners are whining and upset. What do you say to them and other people? Why isn't Bitcoin up more given all this institutional adoption?
Yeah, I mean...
No, Bluebird, you're referring to the beginning of 2022, not the end of 2022. Yeah, you're timing right. You know, like, let's be honest here.
Some amount of selling around the $100,000 level, likely...
Like, I'm really transparent. What's going on and where my head is all the time. I'm not saying I'm always right. You know, I think I was early on the labor market concerns August of last year.
Dollars is a big round number.
Right.
There were probably people who bought and wanted to sell there. We'll eventually get through it. I think in another 6 months, maybe another month, we're going to see another big uptick.
All right, Matt, great to get
That actually concerns me, is when you have these clowns, these suits that go on CNBC or Bloomberg or whatever, and they're like, oh, don't worry, it'll all be fine. The more that becomes the consensus, the more scary it is. Whatever, bro. All right, next. Okay. Okay. Nothing here. What the hell? Okay. Oh, wait. Kimberly Clark
is buying Kenvue in a 48.7
billion. I was looking at Kimberly Clark this weekend. I'm like, man, this dividend is so freaking juicy. But, you know, of course, then it gets acquired. And it's like, all right, well, there goes that. But the dividend, honestly, was looking really good on Kenvue.
Right now, and the idea they could bounce off these lows?
I mean, I'd love to think that we could have some of the laggards lead to outperformers, but, you know, just looking at third quarter earnings, staples are a laggard there as well. One of the only two sectors with negative.
Yeah, that's
money. You bring up a good point. I'm also thinking, as I hear you speak about AI and the engine of capitalism that is fueling AI, but AI being used by the left as a tool to say this is why we need socialism, because it's going to eliminate jobs and people are going to need more help. I just put that out there as an open question. We've got an hour and a half to go. Coming up, Americans are deeply divided on what it means to be upper class. We're going to tell you what's driving the split in the second hour of Big Money. But first, is the Buffett premium fading? Warren Buffett's era as Berkshire CEO nears its end, and Wall Street's wasting no time moving on. We're going to have more on that next.
Yeah, it's really actually kind of sad. You know, I love Buffett. I love his principles, but it is somewhat of a sad time to see that decline in Berkshire stock, especially as you know, the market is just sort of racing all-time highs. You're seeing the end of Buffett. No. Anyway, all right. I've got a lot to do with House Hack. Got a lot of property renovations going on. We got a lot of updating to do as well with some other big plans before the end of the year. So that means I've got a crap load of office work to do as the CEO. So I'm gonna go. I'll see y'all in the next one. Love y'all.